Hey everybody, we're live. Happy. Can you see me live? Is it working? It's ended. Why did it end? Damn it. Let me go back, create broadcast. Truflation Nation. Sorry guys, running a bit behind. I don't know why it ended. I mean, ridiculous. I mean, just this is not me. This is software solutions. Create broadcast, waiting for stream. The stream should be live. You should be coming up. It's still connecting on. It's live on YouTube, is it? Yep, here we go. Live on YouTube. X, waiting for X. I tell you what I'm going to do. I'm going to do something here. Yes, leave. And then here, create broadcast. Start all over again. Truth. Sorry, guys. Bear with me. Just trying to get this fixed. Select source. It's going to be, this is the source. Everybody should be able to see me. It's on. Okay, now it's live. Here we go. Whew, broadcast created. All good? You got it? I'm just going to mute myself over there. Hey, everybody. Back again. Thursday, November 20th, 2025. I'm Stefan Rust. I'm the founder and CEO of Truflation, and come to you every Tuesday and Thursday with a bit of insight in terms of what's taking place in the macro landscape, inflation and truflation, what's happening over there. And then ultimately, today, I'm going to cover off one specific topic that all of you have asked for, which was really a blow-by-blow comparison to the price stats, how we're different to price stats, and how we're different to the Adobe Digital Index. So I've got a bit of a presentation for you. Can you imagine? Me and AI, we managed to create something like that and address the questions and concerns that you might have. So I hope you like that. Yeah, smash the likes button. You know where to subscribe us. And if you haven't followed our newsletter, please follow our X account and subscribe to our newsletter. We have just announced a new feature that no more will you be able to just access our data for free. You will have to just sign up. You get it for free. All you need to do is pay with an email. Just give us your email and then you can access everything for free. So that's all. You don't need to pay much, no fiat, no dollars. Ultimately, if you want more features, more capabilities, more insights, then ultimately you might want to pay. But we're coming up with a new pricing package that makes it even more affordable for everybody to participate. I mean, ultimately, we still need to keep the lights on. We need to keep the infrastructure going. We need to continue to add new features, make a great user experience for you so that you enjoy and learn from the data that we have. And we will share with you arbitrage opportunities, how you can take this into other areas and leverage this data. We showed you one example, which was the price of eggs, and then taking a prediction on Polymarket as terms of how that would fare. If the government weren't shut down, you might have won some 20x return on your prediction based on the data that you've got from Truflation. And we're professionalizing that more and more. And maybe I'll share something early on in what we're doing in that category with you as well. So let me just come here. I'll see if I have it. I think I did. Here we go. Yeah, it's not quite this, but I will share something with you a bit later on. What are we talking about? Unemployment data or employment data. Today, this morning, the BLS, the Bureau of Lagging or Lying Statistics, they call themselves the labor statistics. These are the same institutions that reported 1 million lost jobs or jobs not created in 2024, were 1 million jobs that weren't created. And if you don't believe me, read it up, right? BLS 2024 job report correction. So here, look at this. You can see here from your Gemini AI. So if they're hallucinating, you can hear, but also you can see here on September 21st, BLS reports record correction in job numbers due to surge, right? Whatever, I don't know what that means, but here refers to an annual benchmark revision, which showed that job growth in March 23 to March 24 was 911,000 jobs lower than they had been reporting. So they had to revise all of their numbers downwards for a whole year by nearly 1 million jobs that weren't created, that they claim to have been created. So that is the same institution that just announced today here that their numbers were above forecast. The market was expecting somewhere in the 50, 60,000 range, and boom, here they come in and report some 150,000 rate. Where is it here? The unemployment rate at 4.4% changed little in September. Employment continued to trend up in healthcare, food services, and drinking places, and social assistance. Job losses occurred in transportation and warehousing, and in the federal government. We sort of knew that there were going to be a number of jobs that would be furloughed in the federal government. So where do they actually tell you the final number? Again, man, it's like super complicated. We'll keep it all murky, written up by some lawyers that most probably, and consultants that they paid gazillion dollars to. Total non-farm payroll edged up by 119,000 in September. So they're claiming 119,000 new jobs in September. And then they go in the healthcare category, added 43,000 jobs. So nearly 50% of those jobs, not quite, maybe 40% of those jobs, little more than, are in the healthcare category. Food and services and drinking places, that's restaurants and bars, basically, up 37,000. Social assistance, employment, 14,000. Transportation, warehouse declined by 15,000. That's most probably where robots are taking place, in the warehouses. And yeah, ultimately, a lot of transportation was also government dependent. All public services and public transportation, buses, were subject to the shutdown, right? Federal government continued to decline. Only 3,000 jobs, and by 3,000, and is down by 97 since its peak in January. So 100,000 less employees at the government since January. Anyway, that's that. But of course, all of you know, we at Truflation have been covering employment data. So we have launched the Truflation Employment Index, TruFlab. 41 people have already liked it and added this to their watch list. I haven't, so I will right now. But actually, I'm logged in. Why can't I add it to my watch list? It's already in my watch list. Sorry, you just click on this and it goes off your watch list. See, it drops to 40. I add it. I'm now the 41st person to add this to my list. And this, by the way, we just launched, right? And you can see here, significant uptrend. We recognize an uptrend too. And by the way, in order to give you a better visual, this is the whole employment data, right? All employment numbers going up. You can see in here, what's the labor change? So how has it changed compared to the previous month, right? And so here you can see we have a decline, right? So the decline is here from 21,000 and now to here, negative 24,000. So you can see it goes down because of that. And the same here, huge drop in June, up in July, down in August, and then again up in September. We only have 16,000 going up in September. But of course, we're already ahead of the game and we're showing 60,000 in October. So the job market is going up and we're seeing a big set of growth. And just to prove to you that this is a more reliable source, but also includes government sources. So we weigh off and wait out the BLS numbers just to make sure that we don't get surprised and have to do a 911 revision, 911,000 job revision. Instead, we can continue to get accurate number to you. We only report these monthly right now, as we do rely on a huge pool of data sources to get that. ADP, these aren't all of them. Guys, we should add all of the sources. I know we've got Warren in there. We've got dailyjobcuts.com. We've got a whole bunch of other elements. So you have ADP, Challenger, Gray and Christmas, BLS, government, Department of Defense, Government Census Department, also Government and Social Security Administration. So we do leverage a whole bunch of government sources for that. But more than that, I think this is actually a more accurate reflection where you can then see how ADP reports versus how the BLS reports. And then, oops, in the middle is lovely Truflation. It's non-farm payroll. ADP is down here. And then the BLS, of course, whoa, all the way up here, right? So always overshooting, reporting way too many jobs. And I think we have ADP in our calculation, but we also have alternative sources. Here you can see how it's broken down. And right now, where am I? You can see I'm in the fact sheet section of the Truflation Employment Index. You can see the exact numbers, how it's changed versus a year ago, blah, blah, blah. But here, more important, how do we calculate it? Nicely transparent, no lots of text and back and forth. And here we have Census Bureau. We have a whole bunch more of data sets. Warrens, where's daily job cuts? SSI claims. So we have all of these elements up there as well. And we'll be having an unemployment index coming very soon as well. So stay tuned for that. But here you can see total population. We exclude the under 14-year-olds. We exclude the portion of 11 million in the 15 to 18 category that is not a part of the, which is not a part of the employment force. And then so amongst the total labor force is the potential labor force is 182 million. And then we break it down by different categories, and that results in 143 million people included in the non-farm payroll. So here you can see about 2.6 million people working in farm workers. Then we have active military, private household, nonprofit, and then self-employed, so entrepreneurs. Anyway, so we just try to make this more visual, more understanding, and comprehensive, so that you can actually get a better look and feel. And remember, we can also just layer in the change, and you got a better, faster visual. Did you see how fast that was? Wow, look at that, amazing. And then I can take this down. Anyway, hope you find that useful. That's really around the employment number. And I don't know if you saw in the markets today, but the markets did shake up a little bit. You can see that the markets did have a bit of a jolt reaction to the report. Why? The main reason was the increase in jobs means there is a lower likelihood of the interest rates dropping in September, and the market's taking that pretty bad. I mean, there was a quick correction earlier, but that doesn't seem to be the case anymore. So you can see here, this is when the announcement was made, roughly 21:03 GMT +1. I don't know, and then it's just gone back down again. I don't know why. The AI, it's basically risk assets. I mean, all the risk assets are off, and it's trying to shake you dry of your Bitcoin and really take you out. Yeah, a bit unfortunate. I just don't understand this market right now. You know, I guess everybody was hoping for a Fed rate cut, and you can see how these odds change, right? And what really driving this down market is this, right? So you can see here, you know, the last Fed minutes read like another nail in the coffin for December interest rate cuts. So these are all the mainstream medias that are talking about a unlikely chance and opportunity that rates are going to come down. Even though, I don't know if you saw, Jerome, you saw President Trump's presentation speech at the Saudi Arabia US summit. And, you know, AI was a big topic, but he was also talking there about how Jerome Powell should be fired. He's got 3 months left. And this voice of reason there is Scott Bessent holding him in there. I think Howard Lutnick would want to get him fired as well. So lots of different angles there. But here you can see it's just really, you know, the minutes. It's basically, it's not just Jerome Powell. It seems to be more of the constituents on the FOMC that want a no rate cut. economy strong. They believe that they should hold strong on the interest rates. And you can see the market has reacted accordingly, right? So if you come to Kalshi, you can see the market has changed, where Fed maintains rate has jumped by 17 basis points or 17%, all the way up to 65%. Huge jump here. Look at that jump, right? And then ultimately it's come down over here. And you see the same on Kalshi, on Polymarket, right? So you can see here also no change. So a lot of people, still the majority, betting on no change. Let's see, what does, if they change by 25 basis points, what's that going to give you? If you put in $10, you're going to get a $28, so 3x return. That's not too bad. $100, you get 3x return. But what happens if they do a, wow, if they do a 50 basis points, you're going to get 70x, man. That's pretty good return. But the likelihood, again, is pretty low, right? I mean, 1% of the people believe that that is the case. So what are you going to do about that, and how do you make that work? I don't know. But I think one of the interesting, I think that's sort of on the market and the interest rates, how that's impacting the job numbers. That's had an impact on interest rates. The minutes from the FOMC meeting came out yesterday, which is equally having an influence on the anticipated interest rates. There is not a likelihood of a drop in interest rates coming in the December meeting, which is upsetting the market significantly. Despite NVIDIA's reporting yesterday, NVIDIA reported a blowout number. They're getting a lot of investment into the Middle East. They're growing their capacity. The market does not seem to be slowing down, and they're just investing in their ecosystem. It's nothing bad, guys. It's what we're very used to in crypto. And they've got all this cash, and instead of paying it out as dividends, they're investing in their ecosystem. They're growing the ecosystem. Why? Because that's going to be much more beneficial to the NVIDIA industry, more so than just paying out dividends to investors who've made more than enough, as the performance of the NVIDIA stock has been doing really well, right? NVIDIA stock, show me the NVIDIA stock. So here I can share with you the NVIDIA stock. Okay, it's down since its launch, but look at that spike up yesterday. I mean, it went from, what was it here, 186 all the way up to nearly $200, and now it's down to 189. So still above where it was yesterday. Actually, no, that was this morning. So where was it yesterday? Here, November 19th. Look at that. It was down at 180. So it's still $9 up. A blowout report yesterday. He had that earnings call. You can get that transcript over here. So lots of interesting insights and saviors. So AI is still strong, and NVIDIA is investing in AI. So I'm going to hear some comments. Tim to kill eggs. People pay for the things that come out of chicken butts. Yeah, I guess they do. Get a few birds, never pay for a chicken, but treats again. Well, Watcher Guru just said Morgan Stanley isn't expecting rate cuts in months. Yeah, I think that's in general. We saw most of the market does not expect a rate cut. And based on the minutes, based on the employment numbers that come out, but we all know those employment numbers are not accurate. So do not take those numbers at hand. They will revise them, as the Bureau of Lying Statistics always does. They lie, the butchered lying statistics. That's what those numbers are. So, and people still take them at face value and still don't go to Truflation to see all the employment numbers. Why do we bring you a multitude of sources and report them public? Because everybody still thinks the government's reporting accurate numbers. The government still thinks, the Federal Reserve still thinks they're working with reliable data sets. They're still butchering those numbers to make sure that the lies fit the requests at the federal FOMC, so that they can make it really hard for Main Street to make money and still give the control and power to Wall Street, right? And we want to break that down. Breaking that is hard. It's tough. There are so many different incumbents there that are holding on to various specific positions. So anyway, that's just a task at hand. New economic models are transpiring. And I think the one that we aspire to is working with the government to make sure all of that data is made publicly available instantaneously. So it's on the blockchain. Anybody can subscribe to the data sets on the blockchain. Why? Because as soon as it's published to the blockchain, it's visible for everybody. If it's visible for everybody, all the analysts can start working with the data sets. They can have multitude of data sets. They can have their own data sets and combine that with those of the government, and then be able to price what they believe is the accurate reflection of how much I want to buy, how much interest I expect on a 10-year, 30-year commitment to a bond of that nature. And so that's where the market is evolving to. And that change nobody really likes, especially not the establishment. So yeah, same thing to that. Rudarev, again, back one question. If ADP max employment for private payrolls is around 100, and the BLS private payrolls is about the same, how does Truflation calculate 149? Just out of curiosity. Yeah, go and down. We try to be super transparent, and we make all of this available. So you can come here, you can work out. We have a methodology. Oh, damn it! We have a methodology document that you can see here. You come to fact sheet docs. Where's the methodology? It should be live there, but you can download our fact sheet. We do all of our calculations live in real time, and we do have a fact sheet, which a methodology doc that I don't know why it's not displaying, but I will make sure the team gets it up there. But here, no. Docs. Maybe because it hasn't been formatted properly. But yeah, I can share with you. We do have all the methodology. We do publish the methodology, and it will be going up there. I think we were just racing to get this out. And so that's why it's not yet live out there. But here you can see all the methodology. We've tracked it here, version 1. So there must be a version 2 somewhere. But you can see that we've actually broken down and explained in key detail how we calculate it. But that's a good question. And we do differ from ADP as well, mainly because we take other sources and we provide other weighting sets associated with those sources. Yeah, here 143. You know, Revelio Labs was just launched a few months ago. Willing to partner? Yeah, I don't know what Revelio Labs do, but for sure, happy Revelio Labs. There we go. Damn it, Revelio Labs. Here they go. Here, the entire workforce revealed. Yeah, perfect. Yeah, would love to have a look at that. Thanks, Rudarev. Would love to definitely explore engagement. If you have a contact there, please let us know. Chimburuama Clement, Young Trade, shout out to Truflation from Nigeria. Thank you. When Truflation in Nigeria? I don't know yet. We are not yet ready for Nigeria, but we're taking a look at that. I really think our next focus should be China. It's such a big market. It's the second largest economy after the US. So I think we just need to take a look there. And take a look there. But I think really, you know, Rudradev, you've been asking about this for a while. And so what I did is just go away and work with our analytics team to just come up with a bit of a presentation in terms of how we are different. And the main reason why we're doing this is here, I'll go through a comparison of Truflation, Price Stats, and Adobe Digital Price Index. 3 distinct approaches to measuring inflation in the digital economy. So we're going to compare them against each other. And one of the main reasons why we've been so busy lately is due to this announcement. I don't know if all of you've seen, but Price Stats was acquired by State Street. So Straight Street is now bringing the price stats capability in-house to their own team. And here you can see we'll leverage price stats to develop new proprietary data products and designed to accelerate investment decision making. So they've realized that Truflation is onto something, and State Street needs to find anything it can to try and compete and go after a similar industry that Truflation has built out. So we're we've got new competition, which is validating what we're doing. And yeah, which has really driven the demand in what we're doing and for people to really try and understand how we're pulling this together and what kind of financial products we're trying to develop. But so here, I just really wanted to share with you a quick overview. And Rudradev, you've been asking for this for a while. So what is the difference, right? I looked at all three of them. You've got Truflation, Price Stats, and Adobe DPI. Truflation, 18 million points, 60 plus data providers. Actually, it's 100 census surveys, digital merchants, direct merchant feeds. So we have everything, right? Near real-time updates. So we update every day, not a 3-day time lag, but really updates all the time. And it's not 3-day time lag to the official data in each of those markets. And bear in mind that we have 12 categories. We track the full CPI basket, not just components of it. We don't just track consumer retail prices. We track the full 12 categories. We have housing, we have transportation, we have retail, we have food, we have all sorts of other, and we take it from real world data. So real world pricing, but also the online pricing, right? Online is roughly 30 to 40% of total commerce. And if that is the case, how do we make sure that that's embedded in the pricing associated with real world, which represents the other 60%? So we need to blend those two together. We also have PCE data. We have employment data, as I just showed. None of these other providers have that full comprehensive suite, right? You can see here, Price Stats, they do an amazing job tracking and working with 1,500 retailers in 27 countries. And they report their numbers with a 3-day lag to the official number. But remember, in Australia, the reports only come out on a quarterly basis, for example, not monthly. And so they're always going to be lagging behind those data sets. And they're very focused just on retail. And so that's pretty interesting. Adobe DE only focuses on online. So they have 80 online US retailers and they take monthly feeds from them. So it's only tracking the evolution of e-commerce. And as it relates to commerce, and this is only roughly 30 to 40% of worldwide of commerce is online in the US. So that's sort of different perspective. Also, Adobe only focuses on the US market, whilst Truflation focuses on Argentina, India, UK. Price Stats, again, only retail and across 27 countries. So doesn't have the full suite of inflation-related products. Methodology, I've already talked to it. We take the weighted average, 12 categories, independent weighting. So Truflation calculates its own model. We have our own weighting mechanism, and we go into deep category granularity, right? So we go and break it down very deep, and we have a lot of history to show for that. Price Stats is consistent across all countries. So they take one model and they wrap that across all the different countries around the world. So how retail and the pricing across retail, across 27 different countries, how that changes and what that looks like. Adobe, again, only online, only e-commerce, and they copy the exact same model as the CPI, which is, over some 100 years old, and it's the Fisher Ideal Price Index. That is the model that they use for calculating price changes and evolution. Geographical coverage, I talked about a bit earlier, right? Truflation, we're in 4 markets. Price Stats in 27 markets. Adobe DPI only in the US and mainly e-commerce focused. So, okay, Rudra Red Dev, thank you. CPI uses a Las Pieris I believe the PCE uses Fisher Price model. Okay, then they're more in line with the PCE, right? Which is the CPI model, I guess, or PCE model, not the CPI model. Yeah, look, I just put this together earlier today, or asked the team to put something together earlier today, and this is what they came up with. And obviously, there's room for improvement. And yeah, but we think what differentiates Truflation is we have a Web3 architecture. Our whole data is stored on the Truth network, which is hosted by multiple node operators. So it's fully decentralized, it's transparent. So anybody can see the calculations, it's immutable, and it is through the Truth scan. Again, you can identify the sources. 12 categories versus CPI 6. We have PCE and employment data, housing data, and we've got a whole suite of other indexes, right? We've got the breakfast index, we've got the deadlift index, we've got the EV vehicle commodities index, we've got the blockchain purchasing power index. So we just try to build all these other indexes, and ultimately, because we are on chain, makes Truflation DeFi ready, and so ready to work with synthetic asset companies, ready to bring to you the future. And we include prediction market data in our calculations that nobody else does. There are a number of APIs that allows us to track and break down and filter the economic relevant data sets from these prediction markets and include that in our weightings and our weighting systems. And by the way, in January, Truflation will be allowing you to predict inflation up or down anytime on a daily basis or even a weekly basis. So you don't need to wait a month whether you think inflation's going up or down. And we will have that same model available for the forecast model. So we build a forecast once a month to map that against the BLS. Where will the BLS come out at? And that model will be taken and driven forward with real live data all the time until the next reading, where the formula gets updated to tweak and incorporate some of the changes that we feel and optimizations that we feel are needed in our ability to better forecast and improve our internal algorithms. I think that's really what we put together for you. Yeah, I hope you thought this was helpful. Yeah, and like I said, again, our data is real time, designed for real time financial product innovation and decentralized finance. Our belief is the financialization of data. We don't really necessarily believe in traditional models, and that's why we have really focused on building out this financialization of data. And just to quickly share with you something that we've been working on, and we will have announced, you if you're following our Twitter, follow our Twitter, listen to us, our subscription, sign up to our newsletters. And if you're not a subscriber of Truflation, help us shape what you want in Truflation.com so we can better deliver to you interesting products. Here we have a blockchain fund, a BTF, blockchain treasury fund, Bitcoin treasury fund on chain, right? So we've actually built a model that purchases, together with Quantum, that purchases Bitcoin, or wrapped Bitcoin, I should say, based on Truflation buying signals or signals that are coming from the Truflation that get interpreted in a certain model and they get delivered up into the purchase of Bitcoin. And this has been outperforming a DCA model. We've got a prediction market. I told you in January, we're coming with prediction markets. So we'll allow you to come to Truflation.com and provide your own prediction. And we have MCP live. So you can actually use the data integrated into an LLM and run your own regression analyses. You can run the regression not only using Truflation data sets, you could also do it with other prediction market data sets. So you can then combine and leverage the capabilities of Truflation with binary options and prediction markets. And so that's sort of really where Truflation is going, where we've started to build out the capability, and we have new team members that will develop the capability to allow fundamental incompatibility of virtual automated market makers. So we are not using automated market makers for binary options. Think about it. The prediction markets are binary options. You're betting on an up or down, and the possibility of it being above or below that bracket. So it's going down the route. We've studied the fact, and Roland's done all this work in this. We've studied the fact that MMMs don't work in this. And so we've got to build out something different. And so we've identified something, and we'll share something more with you. But we have a central order book on Truflation.com that will enable predictions on inflation and economic insights. Thank you, everybody. Hope you enjoyed that. I answered your questions. I shared some insights of what we're doing. Hope you liked that, and shared a bit of where our product roadmap's going. Rudradev, hope you enjoyed that comparison. You asked for it. We delivered. We listen. We hear. We have 2 ears, 1 mouth, although the mouth blabbers a lot for 35 minutes, 40 minutes nearly. So I'm going to hang up now. Thank you, everybody. Have a great weekend. I'll see you again on Tuesday. I will have an adjustment to the time zone as I'm going to be traveling again. And we've got some really interesting meetings taking place right now, so I need to get on the road. But thank you, everybody. Have an amazing day, and we will see you next Tuesday. Slightly different time, but it will be recorded. You can join live, and I'll be in Asia. So just to give you a heads up on what time zone I'll be in. Thanks, everybody. Have a great weekend, and hope the market recovers because it deserves to. The industry's strong, innovation's strong, delivery strong. Don't let Wall Street shake out the market, and take control. Take control yourself. Manage your funds. Stay safe.